The semiconductor design company Qualcomm is scheduled to report quarterly financial results after the stock market's close on July 30th, 2025. Of course, investors are asking me if they should buy this stock before they announce these quarterly financial results because these results have huge implications for stock price performance. I'll answer that question in this video. I'll also preview what investors should look out for from Qualcomm in the upcoming earnings release, and I'll share with you my updated proprietary discounted cash flow valuation model, which I updated this morning on Qualcomm stock, which calculates the fair value of this business. I'll do all of that in this relatively short video, so let's jump in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Qualcomm last updated investors on April 30th, and the management team informed us that their top priorities remain executing their diversification strategy and continuing to invest in areas that drive long-term value. And in the diversification strategy, I have to give the management team credit for their early success in both the automotive market and the personal computer market. They've driven great value in those categories and are gaining market share in those areas. Of course, their core strength remains in smartphones, and the smartphone segment is benefiting from this rising tailwind from the rising effectiveness of artificial intelligence. What's that happening? What that has happening is that people are paying up for more premium phones. So even though the overall smartphone industry, the number of units sold is not increasing by all that much, low single digits would be a good result for 2025 in terms of growth in units. But what's happening inside within the industry, in the smartphone industry, is people are upgrading their phones to more premium phones. So if they were previously buying a $700 smartphone, when it comes time to upgrade, consumers are buying the $800 smartphone or the $900 smartphone. They are upgrading to more premium features because they want those capabilities that are improved and enhanced with artificial intelligence. And of course, that's great news for Qualcomm. In their most recently completed quarter, they generated a phenomenal 17% revenue growth up to 10.979 billion. This is faster than usual revenue growth for Qualcomm, and this is fueled by some of the tailwinds I mentioned earlier. The company's profitability is also increasing up 24% to 3.1 billion. Looking ahead, the management team is forecasting revenue between 9.9 billion and 10.7 billion in the upcoming quarterly earnings release. That would be a midpoint of 10.3 billion in revenue. That would be a sequential decline from their second quarter fiscal 2025 revenue of 10.979 billion. Now, one of the more attractive features of the company's business is that they're a design-only company, meaning they're not doing the manufacturing of these semiconductors. They're designing them and then they're outsourcing the manufacturing. And that allows the company to generate very strong cash flow and cash flow from operations, which increased to 7.141 billion in the 6 months ended March 30th, and that was up from 6.5 billion in the 6 months ended March 30th in 2024. So let me share with you my proprietary discounted cash flow valuation for Qualcomm. Now, I predict or I forecast that the company between today and the very, very long term will generate a present value of its free cash flow of over $210 billion. It's a company that generates robust free cash flow, as I just shared with you, 7.1 billion, up from 6.5 billion in the 6-month period that just completed. Furthermore, their discount rate is relatively low at 11.63%, given that their beta is just 1.26 and their cost of debt I give at 7%. The market capitalization is at 172 billion, and they have total debt of around $14 billion. So the present value of all of the free cash flow from operations, we add to that total their non-operating assets and subtract the debt, and we get a value of equity of over 203 billion. We divide that by the number of shares outstanding to arrive at the price per share calculation, according to my valuation model, at $185. The current market price is $159. So the share price looks undervalued at the current market price. Now, when I go to fiscal.ai, which is my preferred data source because they save me so much time in aggregating all of these ratios and figures from companies' investor relations pages, their forward price to earnings is 13.7. So it looks relatively undervalued when I'm measuring by the forward price to earnings ratio, or even when I'm measuring by my proprietary discounted cash flow valuation model. Now, Qualcomm, the businesses that it's operating in, most notably the personal computer and smartphone markets, are not fast increasing markets, but within those segments, there's categories that are increasing, and Qualcomm is benefiting from those trends. Now, I've had Qualcomm stock rated as a buy all year long here in 2025. It's up a few percentage points, so it's trailing the S&P 500 return by a small margin. But going into these earnings results, should you buy it before or after? This is one of those stocks where it's undervalued enough where you can buy the stock before it announces earnings. If you're a more risk averse investor, you can buy the shares after it announces earnings. But if you're risk agnostic, meaning you don't care about taking a little extra risk if it means getting a little more value, then I would say that Qualcomm stock is a buy before earnings. It's one of those situations where I think even with the increase in risk surrounding an earnings release, it's a stock that you can buy ahead of earnings. If you're an investor that is concerned with risk and you want to minimize your risk, I would say you can buy half before earnings and half after earnings. Personally, given the risk adjusted expectations here, I would do a 75% before earnings and 25% after earnings if I was looking to accumulate shares in Qualcomm stock. Here, I'll mention again that I would advise not to try and time your purchases with investments. Timing the market is a risky proposition. I would prefer to just have an allocation strategy and invest in a stock at regular intervals. But I understand that many investors are curious surrounding these earnings events, and I've just given you my personal approach to these situations when I'm conflicted between the before and after decision. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.